Hello, federal viewers. The buzzword from last night has just been GST. We've been hearing about the GST every sector, cement, FMCG, and now we're going to focus on insurance. And here with us today is India First Life Insurance CFO, Kedar Patki. And he's going to break us down what this means for the insurance industry. So starting off, can you tell what can consumers be happy about or policyholders?
Yeah, I think it's a very welcome move by the government. I think uh, Prime Minister has been talking about, and the entire government has been talking about insurance for all by 2047. I think this will definitely help boost penetration of insurance across length and breadth of India, and you know something like insurance being essential, and that that kind of protects your family. That being exempt, I think it's a very welcome step.
Right, right. When you talk about insurance penetration, many a times, like the way insurance density is calculated based on the premium and all, it may not necessarily reflect the number of lives, right? So, is there any metric that would say, because there have been a lot of government schemes and they've been doing both center and state level this? So, would you say that the reality in India is different from just the insurance penetration number that's put out there?
See, I look at insurance penetration in multiple ways, right? I mean, protection for the family of the breadwinner. Please look at on the lines of Jandan, when government brought the PMJJBY, Jeevan Jyoti Bima Yojana. Look at the coverage that has gone up, uh, across India. So when you look at penetration, it's basically two ways. One is the number of lives covered and the quantum of cover that you have. But with the GST change, I think uh, the cover will become more affordable. It is more reachable in the reach of the common man of India, and it becomes much more easier. So like something like a term product, if you have 18% premium, like instead of 118 rupees, you pay 100 rupees of premium. It's definitely comes in the consideration set of a customer, right? And it's see, I think insurance is a very noble product, because life insurance, especially because it actually takes care of your near and dear ones in the situation if you're not around. So I think it's very important.
Sure, got it. So, if you looked at the cap, like previously insurers paid GST on premiums, right? And simultaneously they claimed input tax credit on the business
Yes.
exemption. So, like expenses like commissions, IT systems, administrative costs, etc. So that's to offset what they had collected, right? Now, so with the GST
Yes.
removed, insurers can't claim ITC anymore. So these
Yes.
former expenses now become direct cost burdens, right? So would that limit their ability to lower premiums?
So I look at it this way, Rachel, that initially, obviously, there'll be pressure on margins uh, as the products. So there are different impacts of input tax credit across the different lines of product, different segments. So what will happen is that over a period of time, the preferences of customers will move. We will have pressure on margins, but like in the past, whenever there have been regulatory changes, and this is obviously a GST one, the industry has made sure that the customers get the due benefit, and all companies and other industry, I think, will strive to pass on maximum benefit to the customer.
Sure, sure. Okay, now to go off on a tangent, RBI has lowered the repo rate, and one of the constant criticism against banks has been that they have not lowered their lending rate against, like, the benefits that they receive from the benchmark rate. So, would you see that even here, like where the customer may benefit might be only 5-6% premium reduction instead of a total 18% reduction in premium? Do you think that could happen, like in the banking industry?
Yeah, so number one, I think today 18% is on term products, and different products depending on the investment component, the rates are different, right? Today, so there is in life insurance there's a rate of 18%, there's 44.5%, there's 2.25%. So there are different rates. Now, what will happen is that, like I said, initially, obviously, there'll be pressure on margins. There'll be some adjustment. Obviously, we'll have to really look at the fine print of the notification, and the premiums might move upwards in the medium term. But
Okay.
we specifically believe that this boost will increase the business as such, and the companies and the industry will be able to absorb much of the input tax credit impact that it will have by way of higher volumes, and we will have to pass on less. So the quantification of how much we'll need to pass on, we'll see. But
Right.
as an industry, I think we'll try to minimize that impact either way.
Sure. Now, can we do a breakup on products? Like, because I believe like a pure term life plan or a health insurance plan, they have minimal investment components, right? So they, I
Yes.
guess, would stand to benefit more because a large portion of their premiums was taxable earlier. But say with investment elements like your ULIPs or endowments, they already attract GST, right, on the risk proportion.
Yes.
So even with GST removed, the effect is, would you say, muted? So do you think it varies, this GST, based on which product?
Like I said, right, endowment products either way pay 4.5% tax. So it's not 18% really, it's 4.5%. Uh, every policyholder will definitely benefit, but like you said, the extent will be different. Likes of term product, the benefit will be to the maximum, and for products like savings, I think it will be muted, but they'll still get a benefit. So typically, it's still for long-term planning, so they will get, they'll still look at this as an option, but the benefit might be muted as compared to term products.
Right. Would you say, see, even in the past, there's a difference between the way each insurer plays, right? See, because LIC, for instance, has like nearly 99% and above, like when it comes to claims payout. And even Max and India First and many others have quite a good, claims
Yes.
payout ratio. But then you're seeing other players who have only 60%, 70% at times, meaning that the customer may likely lose out. So would you say with ITC raising costs, would some insurers, choose not to pass on the benefit? Like, would it effectively shift the burden, from government revenue to, say, the consumer wallets if the insurer wanted to protect their margins? So do you think that could happen, like where some insurers choose to still keep increasing premiums?
No, I mean, I can talk on two fronts, right? I mean, one is the company and one is the industry. So as a company, we have complete commitment to pay 100% of the claims, genuine claims, right? So like our percentage is also very close to 99 upwards, and that also depends on really the challenges in making declarations at the time of taking policy. But as an industry, I feel the regulator, the IRDAI, has done an excellent job in terms of making sure all genuine claims are paid. There are grievance mechanisms, so I believe that companies will not be able to do this adjustment to make sure that their costs are low. I mean, claims is not a cost. Claim is a moment of truth for customer.
No, no, I
So
just
I
mentioned it as an example of, like, when the behavior of each insurer may vary in the market, like that not everybody
but
follows what
I
I see
personally
in
believe that
historical
no, I personally believe that industry will not go this path, and
Okay.
we have higher standards of governance, high standards of morals. So as an industry, I don't think we'll trade that. We'll obviously try to be more lean, more efficient, but claims is a moment of truth for customer. I mean, that's what they buy policy for.
Mm. Right. And would you also, can you talk about IRDA's oversight? Like, has IRDA instructed insurers to, do you see a possibility where they will ask you to reprice? Because typically, I believe only motor health is currently, the rate set by them. Everything else is left up to you. So do you
Yes.
see any change in this stance by IRDA?
IRDA does look at our pricing, and in fact, all the products that we price, they go to IRDA, and
But
they
that's at the
they
time of
make
approval, right? Or even
yeah.
later,
that's-
year
No,
on year increase, does that also
no,
have
so
to face?
no, so marginal increase we can do it at our end, but it's very marginal, and for beyond that, everything goes to the regulator, and they essentially have the customer or policy holder perspective while they approve premiums, or they approve the pricing. So I'm sure they will continue to have this oversight, and for a right reason.
Right. Sure. And some insurers today, since the morning headlines broke, they themselves have expressed concern that, complete GST exemption blocks ITC, raising their operating costs. They said like maybe a reduced GST rate with ITC retention could possibly, maintain tax credit benefits and ensure smoother operation. What would be your response to that?
No, I think this is what the industry has been seeking since quite a long time. But this is a reality today, and the industry will, I'm sure, as I said in the past, also with all the changes, the industry has come forward and tackled those changes with a lot of grit. This change also, I think, as an industry, obviously there'll be a way forward in this.
Right. Most people in India like to see their money come back, right? Like, so it's always like this money back
Yes.
plan, or, you have like this bonus maturity benefit. Like pure term life has never been a popular product except for like some people. So do you see like term pure life going up, say these 1 crore policies going up?
Like I said initially also, right? I mean, we might see a change in customer preferences, but it's a little too early to comment on it. But yeah, I think even I expect that there'll be some kind of uplift in the uh, term policies and the way the people look at insurance, because suddenly today you are paying 18% less. Uh, so that will be definitely a kind of trigger for people to look at insurance more positively.
Right, right. So before we wrap up, anything that you feel about the GST announcement that like people have not like cottoned on to, and it need not be about insurance, but anything that caught your attention in particular?
No, I think we'll really need to see the notification and how it is implemented. But I think there are a lot of nuances to it in terms of what will happen to renewal premiums, what will happen to policies kind of locked in earlier. One impact might be that people might hold on to their decisions, which rightly so they should do. The other thing is, policies that are issued already, they if the customers start feeling that the premium is down and I have bought it earlier, so there might be some rethink on that. But we'll really have to see the fine print of the notification, and we'll one thing for sure, we've had internal discussions now. We will do whatever it is in the best interest of the customer. So that's for sure.
Sure. Okay, an offbeat question, and you can choose not to answer. But I heard from many MSMEs and this that GST is so complicated and they find it so difficult. So I realized that, like, one component of being a life insurer is not just that you're receiving policies, you're doing investments of your own. So how much does it fry your brains when you guys file GST? Is it as complicated as it is for MSMEs?
So for us, I think for us, we are very large players, so we have the whole mechanism of ensuring that we are completely GST compliant, and also across states. So across length and breadth of India. So yeah, it is complex, but it's required, right? I mean, it gives government a revenue, so it's not as complex as possibly the burden on MSMEs possibly, but yeah, I think we are able to
Right.
manage it well.
Yeah, so it hasn't fried your brain circuits yet. It's good to know.
No, no. I mean, the best part is that it started in 17, and we had enough and more time to make sure that all the systems are implemented, and the GST department also has been patient with everyone. So I
Okay.
think no, I think it has evolved, and it has evolved well. So I think
Right.
we are fine with it.
Okay. This is great. Good to know. And anything on the state revenue side, like as insurers, are you only having to fight with the center, or does the where the company is based, which jurisdiction, does that also matter when it comes to taxation for you?
No, in fact, it is across states. That's what I said. So it's across states, and in fact, we have state-wise registrations. So it's basically across the states. All the states will now be kind of estimating their losses and all. So we are seeing some things coming out in terms of states making statements, but it's state-wise for us. It's where we sell the policies, not where we are based as head office.
Right. Okay. This has been very informative. Thank you so much for talking to us, and it was great having you over. And hopefully, with policies going to get cheaper, people will start buying more insurance, hopefully. So thanks for
Yeah.
joining us.
Yeah. Thanks for having me. Thank you.